It is a hike, Scarlett. It is exactly the height we expected, 1/4 percentage point. But let's look into the actual statement. This is a Federal Reserve. This is a committee that is more unanimous. There was a unanimous decision. There is more consensus when you look at the dot plot. They're agreeing with each more, and it is slightly more dovish. That's what we're seeing from this Fed. Again, when you look at the dot plot, they've compressed a lot, Scarlett. The Jeffrey Lacker outlier that from Atlanta to the top, that's moved down in the long-term understanding of the long-term projection of the federal funds rate. It's at 1.4, right? That's what the Fed says. It's unchanged. When you look at the range is a lot more compressed. Okay, but here's what really caught my attention: inflation. There's more of this cognitive dissonance from the Open Markets Committee about inflation. What they saw, right? So what were the long-term projection of inflation? They still say that we're getting up to 2.0%. But when you look at the 2017 and the 2018 projections, they've been revised down, right? And you see some language from the Fed about their understanding of inflation. They're confused about it. They're wondering why it is that they can't create it. Let me read you this language. They are going to carefully monitor actual and expected progress towards their inflation goal. They're much more aware of that 2% for inflation goal and reaching it. But let me tell you, the word in this statement is gradual. It's not measured. That's a huge difference here. When they say measured, what they're looking at is this stair-step function, right? Up, 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 up every meeting. That's not the word they used. They used the word gradual, which to me says we're going to take this hike, we're going to look at things, and then we're going to wait to see what happened.